Hi, my name is Ernesto and I'm a Forex algo trader with years of live trading experience and positive results using statistical edge and EAs. I'm one of the best retail algo traders in the world with a solid tracking record you can verify, and today I want to share my knowledge and connect with more traders so we can grow together. Today I want to share very quickly the importance and basically the edge that you get by using a strategy tester or backtesting 100% for free. And you can see, I use 90% data. That's the ticks as much as I can get from my broker, the one that I use in my live accounts. For my accounts, and since 2021 that I'm making money, 90% is enough. If you think that you need 99% or to pay for special ticks, that's up to you. I won't change your mind. I don't care. For me, this is enough. I'm sharing what works for me. So let's check. We have here the 2011 drop, and will be the bull run and the drop. Let's go to the chart and show mainly how this looks, because as you can see we have two different type of charts in the same range. So what I'm doing pretty much is testing 2004 to 2014 and then 2004 to 2024, so I can know where my EA is getting the max risk. As you can see, it's not in 2008 or 06, it's here in the debt crisis pretty much. We broke all-time high 2 times. So somewhere at this point I'm getting here I am having 62% drawdown and here I'm having 30%. So as you can see, it's a very huge difference in drawdown, but also in profit, because here I'm closing way more money than the one that I'm closing here. So what's going on? The difference between this chart and this one, and I'm going to explain it here, is that when the bull trend starts, let's say this one, this is a $34 move. When this trend starts, like if the idea is to start the day that you get the first order, like the worst date possible will be, it could be here. It depends on the strategy. I think that my strategy managed to, let's say trade this and exhaust my margin at, let's actually check. Let's see, for example, the biggest drawdown. I'm gonna check first my my biggest losing trade. Okay, that's not the one, but yeah, we have it here. So I trade by level. So let's check 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Have 16 levels. Now let's check the first order that we opened. It was at 1727. So that's my first order, 1727. Yeah, as mentioned, I'm not taking the whole move. That's very important, and I know it because I'm not starting right now at July, for example. I'm starting exactly that day, but I know that I don't take the whole trend because I'm testing the full range and by year. So in 2011, the worst trade starts at 1727. So this is the trend that I'm taking. The difference between, we could say, A, that will be 30%, and B, that will be 62%, is that 62% account is taking the trade, for example, here, and is holding and positioning itself the whole trend, while the other, we cannot see here, this area. We have a kind of a wick, but that wick works as exhaustion for the A model, the 30%, because it's closing orders, and also at one point it closes the whole basket of trades. So meaning that I'm starting a new range, for example, here. So yeah, that color is worst. But as you can see, the black area can be a new cycle or a new basket of trades, meaning that I'm getting half the risk now because I already closed the issue is that you place a trade here and price moves without you. That's how it works. So the only thing that you need is to take retracement. So the first model is holding trades. I like that. I actually trade like that my entire P1 portfolio, so that's not bad at all. But I'm also planning to have something more dynamic that doesn't hold trades that much, and the drawdown also gets lower, because even if you hold this 62%, I can cut it at half. I'm still getting a lot of profit. Like that's will be almost 70% versus 30% risk if I cut it half. So that's amazing in comparing the situations, because this is a very marked bull trend. This is an economic crisis trend. This is the debt crisis, and when they announce possible recovery. They start to show bearish signs until September, that they announced that the debt will be paid and everything was fine. So as you can see, recoveries happen. You only need to hold the move. Why I'm not staying with this model? Because I already tested this and it works. It's very good, but at the end, not everyone likes to hold trades that much. So the idea will be to have something that can trade as much as possible the inefficiencies and close total baskets. So I don't have to hold that much trades, swaps, whatever. That it's not a problem. Like, I already tested everything for the clients before selling, so everything works very good. This is just getting better and better, you know, like this is the process of optimization and finding the best model that works based in past data and your current model data. So that's what I have. I have past data and my current model to compare. So my idea now will be to keep pushing this model, but try to get more profit in regard, like at least I will need to reduce the drawdown. I know how to do it. I just need to take more time working with the EA, but in general, this is looking very good. Win rate is high in both of the setups, and volume of trading, it changes a little bit, but it's not that bad. And as you can see here, we have half the absolute drawdown, so it means that it's also smarter. It's closing also here one basket that it's the same that it's closing here. So mainly that's the one that it's closing the whole profit for this logic, and the other is this move. That basket is not holding it because it closes mostly everything at one point. So this is holding. So pretty much I'm gonna work with this, and I wanted to explain more or less how it can effectively work, because trust me, it works.